your roadmap to the latest in auto. Welcome to Highway Herald. In early 2025, a trade dispute that should have stayed in the shadows roared into the spotlight. The US slapped a stunning 39% tariff on Swiss gold bars, sending futures soaring to $3,534 an ounce. Switzerland, refining nearly 70% of the world's gold, was suddenly on the defensive. Even after Trump abruptly reversed course online, the damage was clear. Shaken markets, rattled trust, and a brewing geopolitical collision. Igniting the fire, Trump's tariff shockwave. April 2025 ignited one of the boldest trade showdowns in modern U.S. history. Behind closed doors, the Trump administration prepared a sweeping 39% tariff, among the harshest ever imposed on a developed ally. For months, Washington insiders assumed gold would remain untouchable, given its crucial role in America's reserve management. But trade hawks spotted a pressure point: Switzerland's heavy dependence on U.S. demand for high-purity bullion. This wasn't just a minor skirmish. Switzerland refines nearly 70% of the world's gold, importing raw ore from across the globe and transforming it into London Bullion Market Association (LBMA) certified bars, the global standard for central banks. For decades, the U.S. Federal Reserve itself has relied on Swiss precision to maintain its reserves. The standoff hit fever pitch on July 31st, when U.S. Customs clarified that the most traded 1 kilogram and 100-ounce bars would face tariffs. Panic erupted. Gold futures skyrocketed past $3,500. Swiss President Karen Keller-Sutter rushed to Washington but returned empty-handed, and more determined than ever. What began as tariffs was now a clash over deficits, transparency, and Switzerland's unyielding banking secrecy. And that brings us to why Swiss gold is so critical, and why Washington can't simply walk away. Why Swiss gold packs a punch. Gold's allure may be timeless, but the mechanics of its supply chain are anything but simple. 4 Swiss refineries, nestled in Lucerne, Valais, and Ticino, dominate the global stage in purity and volume. Their reputation ensures LBMA approval and Federal Reserve trust, making them virtually irreplaceable. Yes, Canada, Australia, and Japan all contribute to the bullion market, but none can match Switzerland's capacity, efficiency, or purity consistency. Even if they tried, logistical delays, higher shipping insurance, and regulatory hurdles would eat into any advantage. In short, the US can't just pivot away from Switzerland overnight. And here's the kicker. For the Swiss, gold is more than just metal. It's woven into the very identity of their export economy, standing alongside pharmaceuticals, precision mechanics, and high-end watchmaking. In just the first quarter of 2025, bullion shipments racked up over $36 billion, making up 2/3 of Switzerland's trade surplus with the US. No wonder Washington's tariff ambush struck a nerve. But this isn't just about Switzerland's strengths. The ripple effects of tariffs are already slamming into America's own economy. Before we delve deeper, we'd appreciate it if you could subscribe to Highway Herald. Your support fuels our passion to create more content like this. The ripple effect on America's economy. On paper, an $80 million increase from a modest 1.2% levy, or even the billions tied to a 39% tariff, looks like pocket change against America's $48 billion trade deficit. But gold isn't an ordinary commodity. Every price shift reverberates across the U.S. economy. A $15 rise in gold premiums can lift Treasury yields by 15 to 20 basis points. That might strengthen the dollar, but it simultaneously weakens export competitiveness, a paradox where tariffs intended to close the deficit risk, widening it instead. Political fault lines in Washington add to the tension. Utah's mining lobby is pushing hard for strict origin transparency, while jewelers in New Jersey and Illinois, dependent on cheaper imports, are pressing for exemptions. In the Senate Finance Committee, a handful of swing votes could tip the outcome either way. Financial markets already sense trouble. UBS warns that extended premiums could boost the Swiss franc, while JP Morgan predicts the Fed might inject $50 to $75 billion into repo markets just to keep liquidity flowing, raising government borrowing costs and undercutting Trump's deficit-slashing agenda. With America rattled, Switzerland has seized the initiative, turning defense into offense. Switzerland's power play and strategic counter-moves. Switzerland isn't merely reacting to tariffs, It's actively taking the driver's seat in this geopolitical showdown. Instead of isolating gold, Bern has bundled it with other prized exports such as pharmaceuticals, luxury watches, and precision instruments. By doing so, a single commodity dispute has shifted gears into a complex, multi-front negotiation. Swiss diplomats have hinted that any U.S. exemption on gold might be tied to relaxed quotas on pharmaceutical imports or reduced tariffs on machine parts. Yet when it comes to banking secrecy, Switzerland won't budge. Financial privacy isn't just a policy. It's rooted in the nation's constitution, culture, and political identity. No trade deal can pry that open. Domestically, the tariff has sparked debate over how potential revenues should be used. Conservatives want protectionist programs to strengthen Swiss industries, while progressives push for climate and welfare funding. Still, across the spectrum, the message is united. America won't get an exemption without concessions. That firm stance relies on refining dominance. With over 2/3 of the world's bullion flowing through Swiss refineries, Bern holds a bargaining chip the world simply cannot ignore. And as both sides dig in, the next question is what possible endgames are even on the table. Endgames in sight, deals, dilemmas, and dangers. Both Washington and Bern recognize the dangers of letting their gold dispute drag on. For the U.S., tariffs risk embedding long-term premiums, driving up borrowing costs, and denting the Federal Reserve's credibility. For Switzerland, losing reliable access to its second-largest market could slash revenues and force a rethink of its export model. One potential off-ramp emerging in diplomatic circles is a partial transparency deal. Under this arrangement, Washington would soften its demand for full origin certification, while Switzerland would ease tariffs and grant only limited, tightly controlled access to financial data. Such a compromise could trim $4 to $5 billion off America's trade deficit, calm volatility in gold futures, and ease pressure from domestic lobbies on both sides. Yet even this middle ground carries lasting costs. Added compliance, higher insurance, and logistical delays could entrench a permanent $2 to $3 per ounce premium. Behind it all lingers a deeper question. Has Switzerland's hallmark independence turned from an advantage into a liability in today's aggressive era of bilateral deals? Markets remain tense, reacting sharply to every new signal from either capital. Which brings us to the final verdict, a golden chess match with global stakes. What began as a minor tax dispute has turned into a high-stakes chess match with global consequences. Trump's push for a 39% tariff on Swiss gold bars has strained U.S.-Swiss trade ties, shaken monetary policy, and rattled market stability. Washington now faces three options: drop its demand for origin transparency and secure cheaper Swiss gold, double down on tariffs and accept inflationary costs, or diversify reserves into other metals. Each path carries risks for bond yields, currencies, and investor confidence. Now we want to hear from you. Do you think Switzerland's dominance in gold refining gives it enough leverage to withstand U.S. tariffs? Should Trump compromise on transparency to avoid long-term economic costs, or hold firm regardless of the fallout? And could this gold standoff spark a larger shift in how nations manage reserves and shape global trade strategies? We love to hear your insights. So drop your thoughts, hot takes, and personal perspectives in the comments below. This is a golden chess match, and every opinion adds to the conversation. If you enjoyed this deep dive into the high-stakes clash over Swiss gold, don't forget to subscribe and ring the bell so you're notified about the next updates here on Highway Herald. We've got more stories coming your way that blend geopolitics, trade battles, and the automotive world you love. Thanks for watching, and see you next time. Check out the videos on your screen for more exciting content.